This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, everyone, and welcome back to another episode of DeFi Decoded. My name is Andrew Young, and unfortunately, our co-host Alex is not here today, but we have a very, very special guest, and I'm really excited to introduce him. We have Rodney Yesep, who is a partner at Hack VC, an early stage cryptocurrency VC firm. And today we're going to be talking about sort of the recent crash in crypto as well as Terra Luna, and also look at some of the opportunities he's looking into during this crash, and then also dive into how Hack VC invests and what they're looking for. So with that, welcome to the show, Rodney.
Yeah, thank you so much for having me. Looking forward to this discussion.
Yeah, so I mean, we've known each other for a long time. We went to the same school, same university, and it's been interesting to see because you kind of we both sort of got into the crypto space in different ways. Obviously, I got more on the operations side, and you came in through the investing side. So I think it's going to be a great discussion. I guess before we get into sort of Hack VC, I wanted to ask, what's your take on the sort of recent market movements in crypto? Obviously, it's been a super volatile last couple of weeks. We can also dive into a little bit about Luna as well, but I'm just kind of curious, how are you guys looking at sort of the macro of the crypto markets right now, and how do you see it shaping up?
Yeah. I mean, in general, I feel like part of the reason why crypto markets are going down right now is because of like increasing like interest rates and like general like stock market like pullbacks too. I mean, I feel like that has a lot more gravity than like crypto like as a market itself, which kind of like correlates like pretty strongly to crypto. So in general, there's like a big pullback because of rates, but outside of that, I mean, there's been a lot of like reckless stuff that's happened like on Ethereum or other networks recently that I guess would also be a cause for general market downturn. And also like having been through like a couple cycles, I guess now, or like this is like the second big one I'm directly in. Like it always feels like there's like breath in the market and like it breathes in, breathes out, and I mean, I feel like it has to get boring before it gets exciting again. So I feel like a lot of the best opportunities though happen in bear markets, and before people realize that like bull markets are even happening, like I feel like bear markets already like 10x ones. So it's always good to be in the space regardless.
Yeah, totally. I always sort of tell people that the way to do well in the crypto space is just to kind of persevere even during the downturns, because a lot of people sort of get into the space, and then when the inevitable sort of bear markets happen, a lot of people leave the space, and then they're not really there for when things kind of turn. I'm not sure if we're really in a multi-year bear market yet, or if we can make that call. But one of the, obviously what you were talking about, reckless things. One of the crazy things over the last week was the Terra Luna collapse. I'm just kind of curious, have you guys been sort of, I'm sure you've been following what's happened. I'm just curious to get your take on it, whether it's something that you guys had looked at investing in, or its ecosystem, or yeah.
Yeah, we were seed investors in Terra from back in the day with like a different entity, and I mean it sucks to see like a bunch of people get impacted by this sort of stuff. It was on our end, we like we're no longer holding a position by the time the downturn happened, but I mean a lot of people were, and a lot of people were like pretty impacted. I know that Terra is like thinking of rebuilding their community from scratch, and not having like LFG be part of the initial airdrop, which would make it more community owned. But I wonder how they're going to go about doing things like maybe like paying off all the people that like held UST during like the downturn, if they're going to like work to like essentially like buy them all out, or if they're just going to try to move on from there. But yeah, it's going to be an interesting story to continue to watch for sure.
Do you think like algorithmic stablecoins, which is obviously what UST was, and sort of the whole Terra ecosystem was tailored towards, do you think algorithmic stablecoins are kind of permanently dead now, or do you think this is more just kind of like a minor setback, or not, I shouldn't say minor, but a setback in sort of the, I guess, eventual creation of this? We've sort of seen a couple iterations of algo stablecoins, whether it's like New Bits, Basis, which never really got off the ground. Yeah, I'm just kind of curious, how are you seeing the stablecoin space and algo stables?
I still think like every single stable is different depending on, you know, how it's like put together, like on the back end. And, you know, a lot of these systems do work like at scale if like they're designed properly, but it all depends on like how much liquidity you can get out of it at a time where it's like super stressed, and like, you know, how sufficient that model is for those kinds of periods. I know there's like schools of thought that I've like heard from like people that are like founders of some of like the biggest stable coins in the space that include things like banks shouldn't even rehypothecate like risk, and everything should be one-to-one backed. Like gold should be held in a storage and shouldn't be lent out when you're not having access to it. Whereas like, I think that like risk-free hypothecation could like improve capital efficiency and like inflates like a bunch of debt into the system. But as long as like, you know, that's kind of how our economy works, right? Like as long as you can like repay everything in times of stress and there's stability in the peg and the collateral isn't devalued. I mean, you know, it should be a system that functions well. But I think that like a lot of people are putting like algorithmic as like a label to like different stable coins or like a lot of other kinds of labels, but realistically, all of these are so bespoke in how they're like strung together. Those are kind of my thoughts.
Yeah, no, that makes sense. Obviously, rehypothecation is sort of just, it's just essentially reusing capital multiple times, which injects tons of liquidity into the system, but also makes it sort of more vulnerable to these types of bank runs and liquidity crunches. And so, I mean, it seems like every time we've tried to do it in the crypto sphere, it sort of comes back and blows us up, just because we don't have a central bank that can kind of step in as the lender of last resort and essentially just backstop everything, which is both good and bad. Okay, so that's great to know, though. So can you tell us a little bit more about Hack VC? Would love to learn a little bit more about how you guys approach investing in the crypto space, what areas you're focused on.
Yeah, for sure. Hack VC is led by Alex Pack and Ed Roman. A little bit about their backgrounds, I guess it'd be pretty useful. Alex was previously like one of the two co-founders of Dragonfly, which is a pretty well-known fund in the space. And before that, he led a crypto at Bain. And before that, he worked at AngelList, which is how I know him, because I used to work at AngelList afterwards, and we connected through that. But he's super smart. We ended up raising like $200 million for our seed fund, and we're about to launch like a growth fund, which we'll announce soon. And that should be really exciting because it'll be up and running in the near future. And our LPs include like Fidelity and Temasek as the anchors, and we have a lot of well-known like venture funds as well, like Sequoia and some other like high-profile backers. We specialize in DeFi mostly these days because a lot of the partners at the fund like were early investors in things like UMA or Augur or Maker or 1inch, Dodo, DYDX, Perpetual Protocol, and a lot of the DeFi 1.0 like a lot of also the DeFi 2.0 that we see today. So writing on that, I guess we've kind of built a proficiency there, and we have like a DeFi lab which equips like our DeFi portfolio companies with like lots of resources that they can like bounce off of. And we do things like provide liquidity for DeFi protocols and like be the first users to like test these protocols as well. But at the same time, we've done a lot of like non-DeFi deals too. We do like some general like Web3 type deals. Like we recently did ETHSign, for example, which is like DocuSign, but for Ethereum, tying like creating like smart contract execution rails for legal agreements. Or like we've also done like decentralized social type projects in the past, or DAO tooling before it became a meme. But and also projects like SportX, which is another like really cool ecosystem which Andrew runs. But
well, I'm appreciative of the support as always, and I think one of the things that was kind of interesting is we both kind of got into the space at the same time. I was kind of curious. I mean, I know the story really well. I would love to hear a little bit more about sort of, or I guess, can you tell the audience a little bit more about how you got into the crypto space?
Yeah, for sure.
Back in
Actually,
2017.
funny enough, Andrew got me into crypto. I remember we were in third year of college, and Andrew was interested in like starting a company, because before that he like dropped out to start a company and then came back to school. And I had a company at the time that did like luxury interior design in Canada that was doing pretty well. And when we were talking about crypto, he ended up like coming up with like a really cool idea for like a crypto protocol, which was like a DeFi protocol at the time, called CDX, credit default swaps on Ethereum. And it was like a fascinating idea. But the only type of risk he could really underwrite was exchange risk, because there was no other DeFi that existed. So obviously, like he ended up like realizing that it's just prediction markets, and he built like SportX, which was a huge success in terms of like how much volume it ended up generating. But off of like investing into his company, I ended up starting a prop fund and moving to South Korea. I ended up like finishing my college education there, like going to like Korea University Business School, which is like a pretty well-known school there. And I ended up getting pretty close to the Icon network ecosystem, and I was going to launch like an ICX station in Toronto. But then like the token price didn't end up doing too well because of the 2018 downturn. But after like deploying the prop fund, I ended up like wanting to get some diversification into traditional ventures. So I ended up joining AngelList. At AngelList, like lots of crazy things happened. Like I was working with people like Naval and managing like the Spearhead program, and working on like special projects as well within the company, which was super exciting. And it ended up seeing like, AngelList, like AngelList Venture like goes through and manages like, I guess like through SPVs, like 40% of all top deals in San Francisco. So you end up getting like a really good view into like the waterfall of innovation that's just like top of funnel and potentially could be valuable later, and also most of the time won't. And you end up developing like a good filter because you get so much data like thrown at you. And that got me like way more into the world of like traditional investing too. So I ended up doing that for a bit and investing into like lots of really cool startups like or like this one called Ashwatha Therapeutics, which is a really cool company too. From there, I ended up like leaving AngelList actually like under a year. I think most people stay for like over a year. I think I was one of the first people, if not the first person, to leave under a year, because I ended up starting like a health insurance company with my roommate where I led operations. We raised like $4.5 million after like they went through YC. And I think it's worth like several $100 million now or something, but they have like 50 employees. They've been growing a lot, but I ended up leaving because back in the day when I was talking to Andrew about like Ethereum scalability problems for like applications on Ethereum, I think this was 2018 or 19 when transaction fees were really, really high, and most applications had to shut down. I ended up doing a bunch of research and putting some money into like Polygon, which like obviously 100x, and a bunch of other of my investments at the time were like doing pretty well. So it didn't really make sense to like work at a startup, and ended up going back into the world of crypto investing more full time. And I mean, throughout like working at AngelList and the health insurance company, I still did a lot of like angel investing into like crypto companies. And it was always like my passion, even though there was lots of other cool shit to do in the world. So yeah, I ended up jumping back in the space because I knew Alex because he was from AngelList too, and we ended up like starting the fund like 15 months ago, and have been deploying ever since. So
yeah, no, totally. And then now at this point, I feel like everyone in the space. Sort of. I feel like every time I talk to you, you're at another conference. So I'm I'm happy we were finally able to nail you down. So what are you guys? So first of all, thank you for that background. I mean, I think you're giving me far too much credit, but I will take all the credit. I'm curious how. So where are you guys seeing opportunity right now? Obviously, this space we're sort of moving into a new market environment. Valuations have come down in the sort of public tokens. Is that also happening in the sort of early stage rounds? Are there certain areas that are being hit harder versus others? I'm just kind of curious from your perspective, where are the opportunities?
Yeah, for sure. I do think there's like a general slowdown of like VCs like being a little cautious to deploy just because of like the turbulence and like what's happening. I think that like when things are calm or like going up, there's just generally a lot more activity. And I think that activity for VCs will continue like throughout the bear market. I don't think it ever really slows down because a lot of VCs know that like most of their hits usually come from deploying in a bear market. That being said, like as for like categories specifically that are like really cool or developing in an interesting way, one thing like I've personally been tracking is like there's like a lot of esports teams that are like traditional esports teams that are like starting DAOs or turning into DAOs, that will have like communities that are like, you know, like 20, 30, 50 times larger than like traditional guilds. And like the impact of that on like GameFi or like gaming as a category. And maybe it's like development could be like interesting to see. Also, like there's like interesting developments happening like in the BTC world with like fungible, non-fungible tokens on BTC, and like potentially like DEXs in the BTC world, which is like an interesting category that I love to keep a pulse on as well. But there's still like lots of like fascinating like DEXs or like DeFi protocols that I review like every single day too. Started by some like really smart people and very innovative in design. Like lots of like founders are coming up with like really interesting ways to like incentivize usage of protocols, or interesting ways to like kickstart traction. And all of that kind of stuff is fascinating because the world of crypto in a way is like really interesting because of the ability to incentivize communities to do things and also like incentivize them with ownership. Like that wouldn't really exist in the real world of like startups because you can't exactly airdrop equity. And so like in the crypto world, it's like fascinating to see how some of these people can target specific users with specific kinds of incentives. And yeah.
Yeah, no, it's interesting. You sort of pointed to the esports and the GameFi world, because that's actually one area that's I feel like has slowed down the most, given kind of like the recent, I guess we can call it collapse in usage for things like Axie Infinity. But it sounds like what you're saying is almost like the next growth surge is going to come from almost like traditional esports teams bringing their existing communities into crypto versus trying to kind of bootstrap an entirely new crypto community. Is that fair to say?
Yeah, it seems like it. And I feel like they understand that they have a lot of leverage when they are in conversations with like traditional GameFi companies. And I mean, if they're able to like incentivize like way more people to do like certain kinds of things than like traditional guilds, then like that turns into like a massive resource. And also like in the traditional world, like esports teams have been like in a way like struggling to like monetize, because most of their monetization is through like sponsorships or that kind of stuff. And these days there's so much fragmentation within like how many games are out, or like how many esports teams exist, and like where the viewership goes. And not a lot of community has actually ever been built within the esports world. Even for traditional like esports teams, their fan bases are huge, but it's not like they're all in one Discord, or it's not like you can contribute as a community member. But all that stuff will be like subject to change, I think. Yeah, we're just seeing it like being ideated.
Yeah, that's great. It's pretty crazy to think about. It does feel like I guess like a traditional sector of the economy that could actually make the sort of the bridge over into the real world. Because I feel like, especially given sort of what happened with Terra, it seems unlikely that the institutional sort of financial firms are going to get into crypto, given all the sort of negative headlines we're seeing right there. One other thing you sort of brought up was this idea of sort of DeFi 1.0 and DeFi 2.0. And a lot of people, DeFi over the last sort of 18 months has actually been performing quite poorly, at least relative to ETH. Do you think we've hit kind of the peak bear market of DeFi, or are we kind of in the DeFi 1.0 is going to continue declining, but DeFi 2.0 is really starting to potentially get really exciting? I'm just kind of curious, how do you guys look at the DeFi space specifically right now?
Yeah, for sure. So I'm like, for context, I'm like pretty bad at like understanding where the market's going to go short term. That was never like something I was good at. I'm more of like an intermediate term and onwards speculative monkey type. But in general, like I think that like DeFi is like pretty undervalued relative to the amount of like volume or revenues a lot of these protocols are earning. Comparing it to like traditional like multiples, I guess like there's like risk associated with these DeFi protocols, and maybe that like puts it like dampens revenue multiples, or maybe just like multiples on revenue in the traditional markets world is just like completely out of whack. But I see a world where in the future, like I'm a lot more bullish on like applications than I am on networks, and it's been like that for like a long time. Like for example, like apps like Everpedia, like on EOS, like pivoted off of EOS onto like Polygon and built Frax. And what happened to EOS, right? Like as a network, it completely evaporated. Like applications on Terra right now have the opportunity to pivot, and it might resurrect as a network, but like in a way, like networks come and go, and applications like that have users and like generate revenues for the protocol are like really interesting. And I totally see a world in the future where like if some of these DeFi protocols end up like becoming like mainstream backends, like it feels like DeFi will like uproot the backend of traditional finance, or like even like potentially in the future consumer finance. And once that happens, I'm sure that all of these like protocols that like are powering this sort of stuff are like going to be extremely valuable, and like probably like have like valuations potentially like in a similar range to like traditional equities. But also there are like other things that we've seen like happen in like the world of crypto that can't happen in the world of equities. Like for example, like Binance. Binance has like an ecosystem, like in terms of market cap, has maybe increased like 40x or 30x like from like last cycle, but its token increased a lot more because of token burn. So there's like a lot of different things that can happen regarding like, I guess like token go up in the future for like DeFi. But in general, like we are seeing like a lot of things that are being built that could be like a lot more, I guess like economically efficient as backends than like what's happening in the world of traditional finance. And I mean, I think you can also see it in things like SportX, where it's like way cheaper to make a bet through like SportX or SX.bet than it is to make it in like traditional markets. And same goes true for like a lot of the primitives that are like in traditional finance, if they're done properly on chain.
Yeah, totally. And I think the thing I've always been sort of promoting is this idea of community ownership. I think that's really kind of like the unfair advantage of crypto networks, crypto applications. Just this idea that when you use a sort of Web3 crypto application, you actually get ownership in the platform, which creates a totally different relationship between sort of user and operator of the platform. It sort of merges the two. You as a user are now also an owner of the platform, and you also have sort of say over how the platform, where the direction the platform goes, and how it sort of, I guess, operates. One thing I wanted to sort of highlight, you had a really interesting point there about how you think that apps are actually sort of more defensible in a lot of ways than networks, which is actually quite contrarian relative to the, I guess, mainstream crypto Twitter consensus, especially given the sort of, I believe it's called the FAT protocol thesis, which is this idea that networks are essentially destined to be the most valuable sort of pieces of the entire pie. I'm kind of curious. One thing we've been talking a lot about is sort of, we think, like I personally think we're going into wave 3 of the smart contract sort of blockchain ecosystem. So what I mean by that is sort of wave 1 was Ethereum, security and decentralization over everything. Wave 2 is sort of where we are right now, which is generic blockchain still, but highly scalable and sort of focused on being relatively cheap versus secure. So things like Solana, Avalanche, Polygon. And then I think the next wave, which we haven't really entered yet, but is sort of application specific blockchains or industry specific blockchains. And so essentially this idea that the same way that countries specialize in certain industries, networks are going to specialize in certain industries as well. Sort of like what Ronan's doing with Axie Infinity and Osmosis with DEXs, and there's all sorts of different sort of examples. SX network with prediction markets.
Yeah.
I'm just kind of curious, is that something you also subscribe to, or do you, I guess, do you think that a better way to phrase is do you think applications in the future will all have their own chain, or do you think applications will just go multi-chain and they'll be on like 50 chains at once?
Yeah. Yeah. The reason why, like I mentioned, it wasn't like as bullish on networks as I am on applications is mainly because we've seen like Ethereum was only like really like strung together 5-6 years ago. And then, I mean, from there was like tons of applications, 75% of which have died because someone came up with a better idea. and then that application that like was a better idea caught all of those like developers and all of the mind share, and then new networks came, and then like they like fell through too. Some of them might exist in the long run, but in general, like, you know, 5 years from now, like who knows like what like the future of like I guess internet like fabric would look like, right? Maybe some kid will like come up with an idea that's like way better than Ethereum in some garage, you know. Or like we'll see like 4 different versions of Solana through like the next 4 cycles, powered by like some guy who's almost SBF, you know. And so in a way, like it's like pretty terrifying, because like network is completely drained from like or value is completely drained from networks the second like users like leave the network, whereas applications are able to like launch on several different networks, and it's more of like is the business that they're in like valuable to people, and like how big is their community, and yeah, like in a way it's like gonna exist no matter what.
Yeah, it's interesting. I don't know. It's so tough to know
Yeah.
what's gonna happen really. Like it's especially given the space is moving so fast.
As for like application specific chains, I think that it like solves the user experience problem that like a lot of people have like to the max. Right now, like even if you're like transacting on Polygon, like sure it's cheap, but it actually was like way cheaper and way faster before. And I mean, it obviously doesn't have the same security as like Ethereum, so you wouldn't like hold all of your funds on Polygon like to begin with, but it has a specific kind of purpose of being like a fabric for really fast transactions in like a low cost environment. And in the same way, like application specific networks will have like even lower costs, and they won't have like a user experience which is like overly problematic or anything like that, because you can bridge directly from like Ethereum to like a Polygon layer 3, or like those sorts of like, you know, parachains or like that kind of stuff. And instead, like it does feel like a lot of like the future of scalability is around like these kinds of things, but it requires a lot of different things to be plugged into it for it to be truly like super valuable. Like if you can have a way to like access liquidity for like borrowing through like bridges and things like that, or you know, if you need to build on top of some sort of core DeFi primitives to create instruments which are core to the community, and you have to have the ability to do so. And also, like I think it's important to have like the option of composability with like the majority of tech that's still being built in the Ethereum ecosystem into the future. So I think the majority of innovation is still like built in EVM environments, and over time that compounds into like a greater lead for Ethereum, I guess like mindshare and innovation. And if you build in like a different ecosystem, yeah, today like maybe it's not as bad to like stay within that ecosystem, but in a year it's going to be relatively worse unless like you're somehow able to like attract more mindshare. Those are kind of like my thoughts.
Yeah, no, I think that's a pretty good way of looking at it. I totally agree as well. I think I like the way I'm sort of approaching the space is that I think the generic smart contract chains, so sort of Ethereum, Polygon, they're going to almost become security as a service chains. So other sort of subnets or app chains, whatever you want to call them, Polygon edge chains, will hook into sort of the main chain for settlement and security, which will be kind of the only use cases that can actually afford the increasingly higher transaction costs, with Ethereum sort of being by far the largest. And then obviously sort of centralized exchanges, which almost in a way kind of act as an app chain. They will obviously continue to hold their assets on Ethereum, and but really like the Ethereum mainnet won't be used for really any types of dApps besides ones that can facilitate these sort of multi-million-dollar transactions.
Yeah, for things like Maple Finance, or like for example, like for them to like move like $50 million, like they'd prefer to do that on Ethereum, because it doesn't really matter what the cost is. It just matters that it's secure. But Andrew, what do you think about like, you know, like once the merge happens and transaction fees are relatively lower, like do you think there will be like still like the ability to launch applications that are low transaction fee, or do you think that it's going to be tough? Like, can you like just batch a bunch of transactions and then like have it be like low enough, but then I guess it's not immediate, or what? How do you think about all this stuff?
Yeah, I don't know. Like the merge, the one thing about the merge is you can kind of always bet on it being delayed, which is obviously continuing to happen. I think so the merge will sort of is expected to lower transaction fees. I think that long term though, even medium term, um, what we've seen is every time there's a sort of a dip in transaction fees, uh, it creates like a whole swarm of demand, which then eventually eats it up. So it's kind of interesting. I just think that demand for block space, with Ethereum being kind of the premium provider of block space, is in such a large secular bull market that any sort of improvements to the supply side to sort of lower costs will be eaten up. And it's not exactly like Ethereum's been sort of moving fast enough to increase supply. Obviously, it's taken like a while to get these things out, which is understandable given that it's a blockchain with thousands of dApps on it. I just don't think it's going to be enough. I think that there's just really no way in my mind that there's going to be sort of one monolithic chain that can handle all of the demand, especially given the fact that we have such low penetration into the entire world, and yet we're still paying $100 transaction fees. So I think a more and more adoption will be pushed to these outer layers. And we've sort of seen that already. Like DeFi market share has gone from 100% Ethereum to 60% in the last 18 months. Similarly, NFTs are about 95% Ethereum right now, but dropping rapidly. Given that, again, it was 100% maybe 6 months ago. I think NFTs are probably the next use case that will kind of move off Ethereum onto these cheaper chains. Solana and Polygon probably being the prime beneficiaries. And so I think that's just kind of the future of what Ethereum is, which is actually a good thing. Like it's going to be providing the most premium block space in the world, which people will be willing to spend $10,000 per transaction for. Any sort of, yeah, I think I just, that's kind of the way I view it.
Yeah, but it would be crazy if like some kid comes up with a better idea in like 4 years,
We'll
and it's super possible. That's the thing, right?
Yeah.
There's a non-0% chance.
Yeah.
So if you have an application and you don't hold ETH, then in a way it's safer because you would be able to build your application on any network.
Yeah, that's true. That is true. That you did make a very good point that applications are more mobile, obviously. By their very nature, they're mobile to a certain extent, especially if they're obviously built on an EVM chain. Then there's lots of different options for them to move towards. Anyways, I don't want to take up too much of your time. This was amazing to have you on the podcast. We'll have to get you on another time, especially when with Alex back. And thanks for talking about sort of Luna, the recent crypto crash, and it was great to learn more about how you got into the crypto space and the opportunities that you guys are looking at right now.
Yeah, for sure. Always happy to chat about this kind of stuff, and looking forward to the next one.
Awesome. And if anyone wants to stay in touch with sort of what you guys are doing, what's your best place to follow you?
Yeah, feel free to follow us on Twitter. We're at hack_VC, I think. Don't quote me on that. I think it's in my bio. You can check at 0xRodney for my Twitter profile. And it should be in the bio.
Perfect. Yeah, I see it right now, hack_VC. Perfect. Well, thanks again, Rodney. And looking forward to chatting again soon.
Sweet. Awesome.
Thanks, everyone.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.